What do you make of, I suppose, the flight into money market right now and what that's suggesting? Because, you look at, I suppose, sentimentality, you can look at like all of those gauges, but doesn't the fact that everyone's just running for the hills suggest that there's potentially some weakness coming?
It's an excellent point. So when everyone's running for the exit, why does the exit get crowded fairly quickly? And we're seeing a lot of that. So there's a lot of money, of fear capital, just flying away from risk assets and moving into this what are perceived to be safer assets, whether it's money markets, short-term treasuries, high-grade investment bonds of short duration, things where people have more certainty and stability. Our view is actually, though, that over time, while that may be a short-term haven for people, it's actually going to cost you and likely going to cost you quite a bit in long-term return and long-term performance. So it's a short-term haven, but long-term it actually could be potentially a risk.
And on that front, because, obviously high-grade IG, great. Everyone, you're relatively safe, even if we were to see the worst kind of macroeconomic conditions. But is there a case to be made that, and I don't want to necessarily suggest that this is the case, but in terms of perhaps not at the IG level, but a little bit lower, chasing a little bit of that high yield, should people be looking at that, maybe not, via the CDS kind of function, but looking for other opportunities like that right now?
Yeah, I think it's a little bit early right now to be looking in the high yield. It's not too early to monitor the space, but spreads haven't widened enough to compensate you for the added risk that you're taking on. It's a fairly predictable market when you look at historical patterns and where we are today. We do see default rates in some of the C-rated companies. We'll see this probably double over the course of the next 6 months. The problem is it's a much smaller list than it was in, say, 2006, 2007. So you're going to chase a really small, finite pool of assets that where default rates, while we predict to double, could actually go much higher if it's a smaller pool to be able to see which companies survive.
I've got to ask you as well, because, Morgan Stanley released a note just last week suggesting that, 1.5 trillion of CRE is going to get refied in the next 24 months. Do you think that when you see that and you see all of the pressure that regional banks are already under in terms of deposit outflow, is that potentially going to be not just necessarily a catalyst for the regional banks, but just for the broader economy and for, I suppose, are we underestimating the implied risk that kind of event will have on the US economy?
Yeah, look, I think bank earnings this week. So starting this week, we're going to start to get this will be the most anticipated bank earnings, I think, probably since 2008. I think everyone will be looking for some sort of hint as to what's going on with that commercial real estate. And we talked about this earlier in the year, which was a lot of these mortgages that are written on commercial real estate have clauses in them that say that your interest coverage has to be under a certain ratio. Well, when your interest rate quadruples or quintuples, all of a sudden you're no longer under those caps. And so it becomes much harder to refinance. At the exact same time, the banks, they're holding capital dear. And so the view is credit availability will start to decline. So there's absolutely a risk. I think the knock-on effect of the broader economy is that you do see a significant slowdown in credit availability, which then has permeating effects, whether it's in real estate or it's in other sectors where it's CapEx, et cetera. But I do think one of the areas where we have seen probably a little less appreciation is in the private equity and private credit space. There's a massive amount of funds that have been raised to be able to fund some of these mortgages as well. Maybe slightly different terms, but it could be an interesting backdrop.